You're sitting across from your mortgage lender. They tell you that you qualify for a $450,000 loan. Your monthly payment, $2,800. You're thinking, okay, that's doable. I make $95,000 a year. That's only 35% of my gross income. The bank approved it. This must be affordable, right? Wrong. Here's the thing. Just because a bank will lend you money doesn't mean you can afford it. Today, I'm showing you exactly why that affordable mortgage is about to wreck your financial life. The bank's definition of affordable and your definition are completely different. That gap, that's where your financial dreams go to die. Lenders will approve you for mortgages where your total debts eat up to 43% of your gross income. They call this your debt to income ratio. Under that threshold, congratulations, you're qualified. But here's what most people miss. Gross income and take-home pay are wildly different numbers. Let's break this down. You make $95,000 a year, $7,917 per month before taxes. That $2,800 mortgage, only 35% of your gross income. The bank loves this. Reality check. After federal taxes, state taxes, Social Security, Medicare, and a 6% 401k contribution, your take-home is around $5,400 a month. That $2,800 mortgage, now it's 52% of your actual spending money. 52%. You're thinking, still leaves me $2,600 for everything else. Should be. Let's keep going. Here's where budgets explode. That $2,800 mortgage, just principal and interest, not your actual cost of home ownership. Property taxes, $350 a month. Insurance, $150. PMI, if you put down less than 20%, $250. HOA, $100. Maintenance, the one everyone forgets, 1 to 2% of your home's value yearly. On a $450,000 home, that's $500 a month. Real monthly housing cost, $4,150. Out of your $5,400 take home, you've got $1,250 left for everything else. Car, gas, insurance, groceries, utilities, student loans, phone. That's 77% of your income on housing. This is what happens when you're house poor. You know that feeling when friends invite you out and you calculate whether you can afford it? That's your constant state. Your one car repair from credit card debt, one medical bill from raiding your emergency fund, if you have one. A 2023 Urban Institute study, households spending over 50% of income on housing were 6 times more likely to experience food insecurity. 6 times. This isn't being frugal. This is being broke in a nice house. Some of you are defensive right now. Housing is expensive everywhere. What am I supposed to do? Look, there's a difference between buying a house and buying the maximum house the bank approves. Same scenario, $95,000 income, $5,400 take home, but you buy a $300,000 house instead. Total housing cost, $2,750 monthly. That's $2,650 left over. An extra $1,400 versus the expensive house. What does $1,400 buy? Freedom. Fully funding your Roth IRA, a real emergency fund, saying yes when friends invite you out, not panicking over a broken dishwasher, building wealth instead of looking wealthy. Here's where it gets interesting. Invest that $1,400 monthly in a simple index fund. 10 years, around $290,000. That's $250,000 you wouldn't have had otherwise. Same income, same life, different house size. Your friend with the bigger house, still paycheck to paycheck, still stressed, still one emergency from disaster. Yeah, bigger kitchen. You tell me if it's worth it. The person who bought the bank's affordable mortgage lost more than investment opportunity. They lost financial security, lost the ability to take career risks because they're chained to that payment. What do you do with this? First, ignore what the bank approves. Work backward from take-home pay. Multiply your monthly take-home by 0.25. That's your max total housing cost, everything we discussed. Second, build a real budget before house hunting. Track every dollar for 3 months. See where money actually goes. Then figure what you can allocate to housing while still living and saving. Third, buying less house than you can afford is the most powerful wealth move you'll make. Already in this situation, you've got options. Refinance when rates drop, rent out a room, sell and buy smaller, yes, really. Better to fix it now than spend 30 years house poor. Bottom line, an affordable mortgage isn't what a bank says you qualify for. It's what lets you live your life, build wealth, and sleep at night. The bank's incentives differ from yours. They profit when you borrow maximum. But real affordability isn't whether you can make the payment, it's whether you can make it and build the life you want. That lender says you qualify for way more than you should borrow. Smile, thank them, do the smart thing anyway. If this helped you rethink affordable, hit subscribe and share with someone house hunting. This information changes lives.